All right, and we're live. Jens Green, how are you?
Hey, how you doing?
Doing good. Thanks for being here today. Let me introduce you first. Jens is someone that I've known for a long time. Jens owns an insurance agency here in Stafford, and he's been in the business, I think, probably 15 years or so. But in 2013, was it, Jens? You opened your own company.
Yep.
um, and Jens probably won't tell you he's won a number of awards through the insurance providers that he works with, and so when it comes to uh, asking questions and trying to make sure that you're in the right position, he's the one to answer those questions. So Jens is here today as our expert in our interview series, and so over the years, just in different conversations, Jens has told me about all kinds of scenarios, right? Things that where insurance really came in and saved the day, and other times where someone didn't have the right coverage, and it can really create an awful situation. And so that's what we're going to talk about today. Is what are some of these mistakes? What are some of these things that are usually pretty easy to avoid that people can miss in their insurance coverage. So, so Jens, I'm going to hand a lot of this off to you. Um, when it comes to what some of those mistakes look like, you talk to a ton of people, about their current policies or about changing policies, those sorts of things. And then we've talked about some of those scenarios. What are some mistakes that you see commonly happening out there?
I'd say the biggest mistake that I see is, people they're just looking for a cheap policy. They're looking, it's totally price driven, and they have the lowest, limits of coverage that are available. And for them to go from like a $25,000 bodily injury limit, to like 100,000, or 200,000, $250,000 limit, we're talking about like $7 a month. I mean, it's dirt cheap. And if you get into a really bad accident, you cause bodily injury or property damage, you're negligent, and you hit a nice car, you hit a Tesla, you hit something German, you're gonna wish that you paid $7 more a month and not get sued, or be in deep trouble for going that cheap. And I'd say that that's the number one thing, is just people strictly price shopping and not worrying about the coverage that they have.
Yeah. Yeah. So you said it to me before. Insurance, isn't just something that you have to have. I mean, this is legitimate protection for your financial future. And if you get into a situation like that where you have an unfortunate accident, and fixing the other person's car is one thing. I guess you could be left with, if you've got $20,000 worth of coverage, you could be left with $40,000 that your insurance company isn't covering, which is bad. But if someone's harmed, then you're talking court and hundreds of thousands of dollars, if not more, that you could be on the hook for if you don't have the right type of policy.
Right. I mean, the easiest way to protect yourself is just to increase those limits and pay just a little bit more money. And if you have a good insurance company, um, you know, it should not cost you that much to go up.
Okay.
Yeah.
All right. So one is making sure that your limits are in line with what they need to be. What's something else? What's something that you see that's another common mistake?
I'd say, as far as, like, we're talking personal, so I'd say, at least on the home insurance side, there's a couple things that I do see. I see that people have their dwelling, their home, the limit that they have, it could be on a replacement cost basis only. So if the house is valued at, let's say $300,000, but the policy is only written for $250,000, and they don't have an extended replacement cost or a guaranteed replacement cost on the home, all they're going to get's, $200,000 or whatever that limit is. So I mean, it's good to know that you have some type of additional coverage uh, in case you don't have enough coverage on your home, and we do see that. I've even seen it one time where someone had actual cash value on their home, so they're getting the cost of depreciation on the home. You're not even getting brand new. Uh, that's the worst I've ever seen. But yeah, the companies we offer do offer extended replacement cost and guaranteed replacement cost, which is it's far superior.
So the difference there, I guess, is if I guess let's say insurance is one of those things that a lot of times we'll put into place and then forget about. And the worst case scenario is you've owned your home for 20 years, and it might be worth $200,000 or more, more than it was when you bought it. And I guess that's where the real difference between the what is it, replacement cost and then guaranteed
Yeah,
replacement
because
comes
replacement
in.
cost, yeah, you're only going to get whatever that limit is with replacement cost. It's not going to go above and beyond it to anything else. And that's a good point. Someone's in a house for 20 years. What else have they done? Have they discussed with their agent any major changes that they've made? Did they get married? Did they, is there an engagement ring that they need to have on their policy? Did they finish their basement? If they have a sewage backup now, if their sump pump fails, do they have coverage for that? Did they go over that with their agent? So it's good to every once in a while when you have, major changes in life to discuss that with your insurance agent.
So I guess that's part of the key then is if if you're doing something like that to notify your insurance company, because a worst case scenario is the one that I gave where you haven't changed it for 20 years, and hopefully that's not going to be the case. But even from when you buy your house to 5 years down the road, if you spent $10 or $15,000 on basement improvements and those sorts of things, you've got to make sure that all that's included in what your insurance company has covered.
Yeah.
Yeah.
Yes, absolutely. I mean, that's huge. That's a scary thing. That's something that actually keeps me up at night is someone, walking by their basement door and it smells funny and they open it and they have 2 weeks worth of sewage in their basement, and they don't have that endorsement. They don't have that coverage. And I've seen it happen. It's been covered, in the times I've seen it happen. But, that's something that's something that you should be looking over with your insurance agent to discuss. Make sure you have.
So you mentioned, for example, finishing your basement. Um, we've talked before about situations where someone's doing some major remodeling and how your normal home insurance policy may not cover everything that's involved there. So, what is that? What is that policy situation? What does that look like?
Well, for the basement, you could have a backup sewer and drain endorsement with a limit, and again, in case like the sump pump or this sewer backs up. And then there's also an underground utility lines coverage where, let's say there's a root that grows in the sewer line and it's somewhere in the middle of the street or off your premises. There might not be any coverage because the backup occurred off your property. And there are companies out there that do offer an off premises, like sewer line coverage for that you can add, and it's very affordable.
Yeah.
So I think that's something that's important.
So what if you're doing some sort of major project like adding an addition onto your house, or um, uh, I don't know, I can't think of another great example, but if you're doing some sort of major project, how does that change what you may need to be doing with your insurance?
Well, what you should do if it's a minor, change, whether you're just painting or replacing cabinets or something, there's not really much that you need to do. You might want to discuss it with your agent, see if you need to increase your dwelling amount. But if it's a major renovation, you should probably be looking at getting a builder's risk policy. So we write them all the time. We have customers where it's a huge addition on the back of the house, or right now we have one where the customer is only leaving one wall on the entire house, and he's even changing most of the foundation. I mean, and he's putting another level on the house. It's going to be an $800,000 construction project. So, we're going to cancel his homeowner's insurance, and we're going to write a builder's risk, and then we're going to put a renter's insurance policy in place for all his contents, all his personal belongings, while his house is under construction, because the house is going to be vacant. If he does have a claim and he still has that homeowner's insurance policy, there's no way an insurance company is going to pay that claim, because it's a vacant construction site. And I've actually seen people get in big trouble. I saw a house, it was 98% complete. The painter, he didn't well, he put out everything in the trash can, but he wadded up the trash can, and the fumes, they had nowhere to vent, and the trash can actually spontaneously combusted, and it burnt the house down when it was 98% complete.
Wow.
And the company that he was with, they only paid, I think, 60% of the claims. They did pay some of it, but it was a big house. So
Yeah.
it's bad. Yeah. So
Yeah.
that's definitely something that you're going to want to do, is get a builder's risk policy in place.
And that kind of highlights the overall idea behind a lot of these things. It's just that if there's some major change, whether it's something you've done to the house, or if you're in the middle of a big project like that, or if your work situation is changing as it would relate to auto insurance, that it's super important to call your insurance provider and let them know what's going on, because it may not require a change, but in a case like that, I know you've told me the story of the house that you're talking about that burned down. That was a seriously expensive house, and 40% to not be covered. I mean, that would ruin a lot of families.
Oh yeah.
That's not something that most families can just absorb. So having that conversation with whoever your insurance provider is critical.
Yeah. Yeah.
All right, so let's see. As far as, so I started to mention, if a work situation changed, there's a ton of people, especially now, that are involved in the gig economy, where they're driving for Uber, Lyft, or different ride sharing companies and things like that. How does that affect how someone needs to deal with their insurance? What does that look like?
Yeah, I mean, so if you're driving for Uber, you're driving for Lyft, there is a rideshare endorsement that we can add, and it's anywhere from $75 to $100 normally. And what happens is that if you get into an accident and you're driving for Uber, you're driving for Lyft, the Uber or Lyft company, they're going to pay for the other person's vehicle that you hit, but they're not going to pay to fix your car. And when your insurance company finds out that you're driving for Lyft and you don't have that endorsement, they're not going to pay to fix your car.
Yeah.
So, and that's something that a lot of people don't know. And I have seen, again, where someone didn't know they needed to have that endorsement, and there wasn't any coverage to fix their car.
And you're talking 75 or $100 a year, right?
A year.
Right.
A year. It's very, very cheap. And if you don't have it, the insurance company is probably not going to pay to fix your car. Uber will do their part to fix the other person's car that you hit, but that's it.
Yeah.
And so we can add that.
Yeah. All right. So with everything that's going on right now with the pandemic, are there any specific questions that you're getting, or situations that are coming up related to that that you can talk about? Calls that you're getting, or or things that insurance companies are doing differently.
I mean, everyone's pretty much doing it. We're all offering some type of credit as a relief, just in place to help people out, whether it's 5% or 10%. All the companies that we represent are offering that relief for auto insurance, and they're really working to help people out with paying their bills, whether they're letting them, giving them 2 or even 3 months to pay their bill. So the insurance companies are just being really great in that sense. And those are the questions that we're getting is, when am I getting my refund check? I can't pay my bill this month, and it's no problem. But make sure you call your insurance company or call your agent and just let them know that you can't pay your bill, because they are doing everything they can to put it off as long as they can, so that when you can get back on your feet, that you can make your payments, and there won't be any penalty for not paying when it's supposed to be paid that month.
Yeah. So what about a situation where someone says, you know what, I'm not sure that I can afford my insurance. Should I make changes, or should I go to a more of a discount carrier?
Right.
What's your advice in that case?
Well, I mean, people do call, and they are trying to get obviously a reduction in their price. And if it's auto related, one of the things we can do is, a lot of people aren't driving right now. So if they're not driving right now, they're not driving 12,000 miles a year. They're not driving to and from work every day. They're working from home. So a good way to reduce your yearly premium on your insurance is to discuss your mileage with your insurance agent. To say, hey, I'm not right now. I'm not driving that far. I'm not really driving anywhere. Can we adjust my miles? That's a very simple way to adjust your premium, and the insurance companies are very willing to make that change for you. The other thing you can do is you can raise your deductibles. I don't I don't think it's a good idea to lower your limits to try and save money. But by reducing your mileage and by adjusting your deductible, I think that's a great way to save some money. And then also, you can think about bundling your home and auto. If you have it in two different places, then put them with one carrier, because there's going to be a multi-policy discount that you get. So, and a lot of times it's a 25 to 30% off credit. I mean, that's huge. So that's another way. So I'd say those are the main ways to really save money, where you're not compromising on the coverages that you have.
Okay. So most of the people that are in our audience are either homeowners or people that are looking at being homeowners. What are a few things specific to homeowners insurance that people should be keeping in mind? We talked about the idea of replacement cost versus guaranteed replacement costs. What are there any other common policy endorsements or additions that go missed?
Well, I mean, there's a siding roofing restoration endorsement that's going to replace, the undamaged areas. If you have some old siding, it's discolored, it doesn't match, it'd be nice to get brand new siding, even though those areas aren't damaged. When we had that big hurricane, or what was it? It wasn't a hurricane. It was wind.
Windstorm.
It was just, yeah, the windstorm. There's people that they had old shingles and old siding, and none of my customers, but there are people out there that they were upset the way their insurance company handled their claim, where they just did a little patch job, and you could really tell where the new siding or the new shingles were, and the old stuff was left, and it doesn't look good. And so there is an endorsement that you can add, and that's something that I would highly recommend.
And so a lot of the things that we've talked about, whether it's guaranteed replacement costs, the sewer backup coverage, uh, you know, um, the roofing restoration, roofing and siding, I think you just said,
Mhm.
um, these aren't really expensive things,
No.
from what I understand.
No.
These are things that might go missing from an extremely discount policy,
Right.
but it sounds like you can go from very basic coverage that, if you ever need it, might put you in a bad spot, to really good coverage that is affordable, and is maybe, you're talking the difference of $100 a year or something like
Yeah, $8 again, $8 a month. You know, very affordable. And when people have the claim, that's when they really wish they had it. And if they weren't told about it, then that's really sad.
Yeah.
So,
Um, all right. So one other thing that I think is worth talking about. You and I have had the conversation before about the idea of an umbrella policy, and that's something that until we had the conversation, I had heard the term, but I didn't really know what it was, uh, and I think a lot of people don't don't think that it applies to them, right? It's that's a wealthy person's thing for for all their companies or something like that. Can you explain what an umbrella policy is and how the average person may benefit from having that in place?
yeah, absolutely. I mean, an umbrella is going to go over top of your home, over your rental property, over top of your auto insurance, over top of your boat. So if for some reason, not that you did something on purpose, but you're negligent again, and you caused either bodily injury or property damage to someone else, and they're going to sue you, there's coverage, and there's coverage for an additional $1 million. So first, your auto, or your home, or your boat those limits would pay out first, and then after those limits are used up, your umbrella is going to go over top and give you coverage for an additional $1 million. And there's been times where people have been in parking lots. Maybe they're not paying attention just for that split second. That's all it takes, and they hit someone. It could happen to anybody. And if you kill them, wouldn't you be glad that you had an umbrella if you were getting sued by the mom that has a couple kids to look after? I mean, and the same thing goes with driving a boat, or your house catches on fire and it catches the neighbor's house on fire, and does the same thing. So I mean, the umbrella, it just gives you additional coverage. um, and I think for, again, umbrellas normally range from anywhere from, I'd say, $150 to $200 a year for that endorsement. And I do think they're a great thing to have. I don't think you need to be a millionaire to have one. You don't have to have $1 million in the bank just to have an umbrella. If you do, you should certainly have a $1 or $2 million umbrella. So,
And the idea there is just added financial protection, because in the case where, let's say, you hit someone badly with your car and they're injured badly, or maybe even they die from their injuries, that's bad enough. But you're probably going to get sued, by that person's family or their insurance company or some combination of those two things. And if if through that process, your auto liability coverage is 300,000, and and you're sued and they're awarded $1 million, well then somehow you've got $700,000 and no way to cover it. And that I'm not an attorney by any means, but I mean that I think in a lot of ways would ruin most people, right? Whatever they do have in savings would be gone. And so I don't think, um, like you said, you don't have to be a millionaire to be sued for big money. And a lot of people in this area are, sometimes intentional, sometimes accidental landlords. We have a lot of military that buys here and then decides to rent for a few years. And what if something happens when they're on the other side of the world, and there's something awful that happens at their house and they're sued because of it? I think that when we put ourselves in positions like that, we have to think about what are the implications and how do we protect ourselves. And for a couple $100 a year, that's the idea of an umbrella policy, I think, could apply to a lot more people than realize it when you start to look at it that way.
yeah.
So anything else before we close up? Anything else you can think of that we should
Yeah.
get out there?
I was thinking when you were talking about things that are missed, I would say that a lot of times I see when things are missed is I see a lot of young people that that have a wife, that have kids, and they don't have any type of life insurance. They don't have any type of term life. And you're talking, again, $25 a month, $15 a month, $30 a month, less than $1 a day, or even $1 a day to protect your family for up to 20 or 30 years. If anything happens to you, you can add a $500,000 term life policy for nothing. And if you bundle it, again, you bundle your home and auto, your life insurance with that same company, whoever you're with, you're probably going to get another credit on top of it. So you end up getting all these credits. It's going to end up paying for itself with your auto, your umbrella, your home, your life. I mean, you have so many credits piled up that you might almost get it for free. So I mean, I think that's really something that's missed, and I think that's something that people should have.
Yeah. Yeah. And when you hear about life insurance, I think a lot of people go to the idea of whole life, which is a completely different product that probably doesn't make sense for a lot of people, especially a young family. It's I think it's as much of an investment tool as it is as it is going to be useful if there's a catastrophic accident. And so, can you explain the difference just real quick?
Yeah, I mean, if you have a wife and a kid and you die, I mean, do you want to leave your family something for their education, for for them for the next 10, 20 years to have the mortgage paid? I mean, that's just something that I mean,
Yeah.
you should definitely have that.
Well, so when it comes to a lot of these things that we've talked about, I think the number one thing that I take away from this is that a lot of us need to have at least a little bit more regular conversation with whoever our insurance provider is. Let them know what our current situation is. Let them know, if there's been any major changes. If someone's gotten married, if they've done a major addition on their house, any sort of change like that, so that they're not in a position where some of these coverages should be there and are missing. And then I think also, kind of what I'm taking away is just that there's a lot of things that I would have no idea what they are, right? The coverage where if half of your roof blows off, the insurance company might only have to replace that half, leaving you with a half 20-year-old faded and a half brand new roof. I mean, I think anyone listening to this would say, well, yeah, I mean, that would be silly. I need to have that coverage, but I think there's a lot of people that probably don't, and calling and checking on that and getting a good understanding for what coverage you have is a 10-minute phone call that's well worth making.
Absolutely.
Well, hey, I think this stuff is great, and I think this is going to help a lot of people. I'll have your information. If people do have questions about some of these terms that you mentioned, I'll have your information in this email and in the description for the YouTube video. And so I'll have that information out there. But I appreciate it, man. Thanks for being here and answering these questions. I think it's going to be helpful for a lot of people.
Absolutely. I really appreciate it. Thank you for having me.
Yeah. I'll talk to you soon. Thanks, Jens.
All right. Take care.